Hi guys, it's Stock Curry, and I'm starting to see some YouTubers say that stocks are cheap right now and that we're near a bottom. Unfortunately, that could not be further from the truth. In today's video, I'm going to explain why stocks will fall another 50% from here. So let's get into it! The reason for the current downfall in the markets is multifaceted. So let me start with some of the recent news that came out on Wednesday, and then I'm going to get into some of the fundamentals of the market and show you guys why the stock market could fall another 50% from here. For starters, we know that inflation is sky high, and this is one of the main reasons why the stock market has been falling. Now, March's CPI data was the highest in 40 years, and it was well expected that April CPI data was going to come in significantly lower. Economists were expecting an inflation rate of 8.1% in April. Unfortunately, that inflation rate came in at 8.3%, and core CPI was higher than expected at 6.2%. Now, this is really a bad thing because it shows that inflation is not dropping as much as people thought it would. People thought that mainly with energy costs going down, we would see inflation go down, but that's just not the case. Yes, we did see the rate of inflation drop from 8.5 to 8.3. However, we were expecting a significantly larger drop than that. And we've had times before, about a year ago, where inflation went down for 1 or 2 months before continuing higher. So unfortunately, this was not the drop that economists were expecting to see, and it points to inflation continuing to be much higher than expected. This is really spooking the markets because while most people for a long time thought that inflation was transitory, we would peak out in March, and for there on out we would start dropping, now it's looking less certain. It doesn't look like that's necessarily guaranteed. And this is really a problem because it means the Fed is going to have to raise interest rates much higher and much faster than expected in order to combat inflation if in fact it does not come down as fast as people thought it would. And of course, April's higher than expected inflation report pretty much guarantees that the Fed will do a half-point rate hike in June and possibly again in July. Now, the higher interest rates is another reason why stocks are going down. And it has to do with the fact that as borrowing costs get more expensive, a lot of these companies who have financed their tremendous growth over the past few years are going to have to start paying off that debt. They're not going to be able to finance debt anymore because it's going to be too expensive, which means the rate of growth is going to slow significantly. And that is what we are already seeing in earnings. Disney reported stronger than expected growth in Q1. However, they are reporting some issues with their park closures in Asia, and more importantly, they did not give good forward guidance because they do expect things to slow down. Disney stock was down 2% on the day and another 3% after hours. It actually closed in the after hours at $101.85. Now, what's kind of interesting is a few months ago, towards the end of last year, I told people that I thought Disney would get back down to $100. And at the time, people thought I was crazy. They thought Disney would never get that low again. But I looked at history. I look at what happens when PE ratios go sky high. They always come back to baseline. They always get back to a baseline of 15 or lower. And I saw that happening. I really thought Disney was going to get down to 100. If you go back and look at my videos from last year, towards the end of last year, I was constantly predicting Disney would get down to $100. And I kept saying, I don't want to buy Disney until it gets down to $100. And it's finally there. It actually happened. So it seems crazy. What was quote-unquote unthinkable was actually predictable last year. But it's worse. Let me show you a few other stocks. Now, Rivian is one of the stocks that at one point was one of the most valuable companies in the world by market cap, despite the fact that they had actually delivered 0 vehicles in the quarter prior. Just a few short months later, Rivian is down to more reasonable levels, having dropped from a high of $180 all the way down to $20 in the past 7 months. Now, we did get a little bit of a rebound rally after hours of about 5%, but that was after the stock had already dropped 9% during the day. And if you take a look at this chart, it is very clear that Rivian is a falling knife, and despite being down almost 90% from highs, Rivian will continue to fall further. And other stocks that retail investors ran up to insane valuations last year are finally coming back down to more normal valuations. Beyond Meat shares tumbled after a wider than expected loss. Beyond Meat was already down almost 14% on the day, and they fell another 21% after hours for a total drop of over 35% on the day. Keep in mind that Beyond Meat was trading at $240 at one point, and it just closed at $20.58. Beyond Meat is down 91% from highs, and it is still trading at a premium compared to the historical valuations of companies like this. Beyond Meat's price to sales ratio is still over 3, and believe it or not, a price to sales ratio that is considered a good value stock is 1, which means Beyond Meat could continue falling all the way down to $6.86 before it gets down to a low valuation. It is still expensive, even though it's down 91% from highs. Now here's the thing, I've heard a lot of YouTubers say that stocks are cheap right now because they're down 50, 70, 90% from highs. Well, let's test that theory because it sounds good. I mean, if a stock drops 90%, it must be cheap, right? Let's go back and look at the Shiller PE ratio to see if stocks actually are cheap right now or if they're still trading at a premium. Now, to give you a little bit of background, the Shiller PE index is a measurement of the average PE or price to earnings ratio over time. And what it does is it shows the price to earnings ratio of the general overall market over a certain period of time. So let's go take a look at the Shiller PE index and see kind of where we are at and whether or not stocks really are cheap right now. Now, the first thing that you'll notice is that the Shiller PE ratio is at 30.98 as of Wednesday, May 11th. Now, there's only 2 other times in history where it has been higher. One was in 2017, right before the last recession, and the other time was during the dot-com bubble. Other than those 2 times, the Shiller PE ratio has always been lower than where it is today. And you will also notice that the median PE ratio, or average PE ratio, is 15.87. That is half of the PE ratio of where it is at today. So in order for stocks to get down to the average PE ratio where they normally trade at, stocks would have to fall another 50% from here. Now, I know that seems insane, but you've got to understand, we've got stocks like Tesla that are still trading at a PE ratio of 100, and that's after the stock has already fallen by over 40% from highs. So I'm hopeful that you can see that when you look at the Shiller PE ratio and you see that it's trading at double where it normally trades, when you look at the fact that PE ratios are twice as high as where they normally are, you have to understand the stock market still has to fall another 50% before we get down to the average PE ratio that the stock market normally trades at. Now, normally when we get a major correction in the stock market, a bear market, a recession like we're in right now, normally what the stock market will do is it will actually overcorrect, which means stocks, even though they would have to fall 50% to get back down to the average PE ratio, they might fall much lower than that, which means the stock market might fall 60 or 70% from here in an overcorrection before we start going back up again. So I know stocks seem really cheap right now, but it just puts things into perspective how insanely overvalued the stock market has been for the past 3 or 4 years. if you have been coming into the stock market, you've only been investing for less than 4 years, you might have thought that the PE ratios that we've seen over the past 4 years were completely and totally normal. But if you go back and you look at history, what I hope you can see in the charts I've just shown you is that historically, the stock market was extremely overbought. It was extremely expensive compared to where it historically trades at. And it's going to take a lot of pain and a lot of time for us to get back down to normal valuations. Now, keep in mind that if you think it's just impossible for the stock market to go down that much, I want you to go back and look at the only other time in history where PE ratios were insanely high, and it was during the dot-com bubble. And during the dot-com bubble, the NASDAQ fell by 80%. That's right, the stock market fell by 80%. Now keep this in mind. The NASDAQ as of today is only down about 25%. The S&P is only down 18%. So if we fall 80% from highs, we have a lot further to go. So no, stocks are not cheap. As I've just shown you, they're still twice as high as they normally trade. Stocks are still very expensive, and they have a lot further to fall before we bottom out. So, what am I doing right now? How am I playing this? First of all, most of my money is tied up in cash. There are a few stocks here and there I've traded, but by and large, the vast majority of my investment money is in cash. And in addition to that, I have been doing some very short-term trading to take advantage of the volatility in the markets. Now, I don't get it right all the time. I make a lot of mistakes. I get it wrong a lot, and that's okay. Remember, you only have to be right 60% of the time to make money in the stock market. Last Wednesday, when the Fed had their meeting and Jerome Powell spoke, we bought some call options. We made a lot of money on those call options, sold some of them on Wednesday for significant profits. And you might have seen this celebratory video I did. Well, the very next day, the stock market did a complete 180, and the NASDAQ had its worst day, or third worst day in the history of the NASDAQ. And of course, I lost a lot of money that day. I did not get it right. So I got it right on Wednesday, got it wrong on Thursday, sold the stuff on Thursday, wasn't really sure what to do. Friday, I opened a put option expecting the markets to go down on Monday. We made a 72% profit on that. Sold that Monday, bought a call option Monday night, sold that Tuesday morning for a 56% profit. Now, those are the major plays I did. So if you go back a week now, and you look at Wednesday of last week to Tuesday of this week, so a 5-day trading period or 7-day total week period, we did 4 trades. I got 3 right, 1 wrong. And that's all it takes, guys. That's all you have to do to be profitable. You just have to get most of your trades right. So I don't get it right all the time, but I get it right most of the time, and that's why we're profitable. That's why my portfolio and a lot of the people's portfolios in the VIP Discord, we're actually up on the year. We're making money. Even as the stock market is down 20%, our portfolios are up. We're making money. So I just want to invite you, if you are sick and tired of losing money, you want to make money in this crazy market, come join us over the VIP Discord. If you want to sign up for that, I post all my trade alerts in the VIP Discord. I explain why I'm buying the trades, and I let you know before I actually buy them. That way you can decide whether or not you want to jump in or maybe wait a trade out if it's too risky for you. Because I do let you know if a trade is super risky, and I tell you position sizing and all that stuff. So if you want that kind of help, you want to make money in your portfolio, then come join us over at the VIP Discord. If you want to sign up for that, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. And if you're curious what I'm trading right now, what I'm in right now, nothing. I'm completely out of all of my options. My trading portfolio is almost entirely in cash. I do have some GLDG and a little bit of AMC, but outside of that, it is all cash. I don't have any options trades right now because unfortunately the market is just so uncertain in the very short term. We are right at support levels on the indices, But the overall market technicals are still extremely bearish. And I have no idea if we're going to bounce and go up over the next few days, or if we're going to break below support and just continue going lower. So in the very short term, I literally have no idea what's going in the market because there's no clear direction. I'm not trading anything. I'm just holding cash. Long term, though, over the next year, I do expect the market to continue to drop, and it drops significantly. Now, if you're wondering about cryptocurrencies, yeah, it's bad. Bitcoin is well below 30,000. Yesterday's video, I went through some technical analysis on Bitcoin and showed you that if Bitcoin dropped below a certain level, then it would pretty much guaranteed drop down to 19,500. And today, Bitcoin did drop below that very significant support level. It is now down almost at a 2-year low. And if you look at the market technicals, Bitcoin is at this point almost guaranteed to get down to 19,500. About 50% or more of people who are invested in Bitcoin at this point are now losing money on their cryptocurrencies. And as more people lose money, keep in mind that cryptocurrencies are heavily margined. In the stock market, you typically deal with a 2x margin, right? So if you put $1,000 in your account, you might be able to trade with $2,000. But in crypto, the margins go up to 100x. So you can put $100 in your account and you can trade with a, $10,000. I mean, it's insane. The problem with 100x is if the crypto goes down by 1%, you've just lost your entire investment. Even if you're only in at 10x and crypto goes down by 10%, you've lost your entire investment. And right now, Bitcoin is down 50%, over 50% from highs. There are a lot of people who are losing a lot of money in cryptocurrencies. And that's why you're seeing cryptocurrency, because it's leveraged so much higher than the stock market is, that is why you're seeing cryptocurrencies fall much faster than the stock market is falling. So keep that in mind. Crypto is absolutely 100% in a crypto winter, and I do expect Bitcoin to get down to 19,500, which is the next major support level. I would not be investing in cryptocurrency right now, so just keep that in mind also. What's the best thing to do with your money? All I can do is tell you what I'm doing, and I'm holding cash. I am waiting for the right time to buy in, and I have not found that opportunity yet. In my long-term portfolios, I'll most likely be holding cash for another year or two until we bottom out. In my short-term trading portfolio, I am holding cash at the immediate time being just because I don't really see any clear direction in the markets. All right, I hope that helped you guys out. Again, I explained all that stuff in the VIP Discord if you guys want to come join us over there. Finally, I just want to remind you, please hit the like button and subscribe if you haven't already. I hope you guys got a lot out of this video. I hope you have a lot of success trading, and I will see you tomorrow.